Today we're going to talk about Opendoor, and more specifically, the price action that happened on Friday. Going into that day, the data suggested that we could see a nice push higher. Momentum indicators, overall sentiment, and even the volume trends pointed in a positive direction. But instead of moving higher, the stock went the other way and slipped back. At first, I thought maybe it was just the lack of a real catalyst. Sometimes stocks consolidate when there isn't fresh news or big events to drive buyers in. But after digging deeper, I found one red flag that really stood out, and it could explain why Opendoor dropped on Friday. I want to share that with you so you can do your own due diligence and form your own view. The last press release came out on September 17th. Aside from that, we've only seen filings, Form 8Ks, Form 3s, Form 4s, and other standard updates. But Friday morning, a new 8K came out, and that's where things started to get interesting. This filing went over a leadership change at the top. The company announced that Christie will be stepping in as the new interim chief financial officer, starting September 30th, 2025, and continuing in that role until at least May 2026. At the same time, the previous CFO was out, effective immediately as of September 19th. The filing didn't use the word fired, but the sudden transition definitely gave that impression. Some investors looked at this as a positive. It's an internal promotion, and it shows the company is looking at talent inside the organization to fill important roles. Christie's compensation was also laid out in the filing, around $400,000 in RSUs and about $1.2 million as a base salary. That's pretty standard for an executive role at a company of this size. To some people, this move signaled stability, an attempt to fill open positions across the executive team, and maybe even a chance for new leadership to bring in fresh strategies. But the red flag I mentioned comes from looking deeper into the insider transactions. When you review the filings, especially those tied to Christie, you see a very clear pattern: consistent selling. In total, roughly $1.4 million worth of stock sales and zero buys. Looking back at the history of transactions, it's the same story every time. Shares are granted, and then those shares are sold. The filings show transaction code S, which means direct selling, not for tax purposes. If it was for taxes, you'd see code F. That's important because to me, it suggests low commitment. A CFO who consistently sells nearly every share they receive isn't exactly showing long-term confidence in the company, and when the market sees a top executive doing that, it can send a negative signal. On Friday, as this information came out, Opendoor stock price reacted by moving lower. Now let's be fair. Opendoor hasn't had the strongest price action for most of this year. Aside from a rally back in July 2025, the stock has been trending downward. So one could argue that Christie was just reacting to the reality of the market. Maybe she didn't see a reason to hold, given how the stock has performed. From that perspective, the selling could be seen as justified. But for me, when I see a CFO selling almost all of their shares, I take that as a red flag. Executives are often paid well in cash, and stock is usually given as an incentive to align leadership with shareholders. When an executive chooses to sell everything instead of holding on to at least a portion, it raises questions. Do they not believe in the long-term vision? Do they know something the market doesn't? Or is it simply a lack of confidence? The other angle here is institutional activity. On Friday, there was a lot of selling from institutions as well, not just insiders. That adds another layer of pressure on the stock. When you see both insiders and institutions reducing exposure, it creates a negative sentiment that can push the price lower, even without a big headline or breaking news event. Of course, not everyone sees insider selling as a bad thing. Some investors believe it's just part of personal financial planning. Executives may want to diversify, pay for personal expenses, or simply lock in gains. In Christie's case, the pattern of selling goes back years, even to 2022, so maybe this is just how she manages her compensation. Still, the timing is hard to ignore. The sudden CFO transition, paired with consistent selling, sends a message that the market may be interpreting as a lack of commitment from leadership. That could be one reason why the stock pulled back so sharply on Friday, despite other data suggesting strength. So, where does that leave us? On one hand, you have an internal promotion that could bring some stability to the executive team. On the other hand, you have heavy insider selling that raises questions about leadership's confidence in the company's future. Both perspectives are valid, and ultimately, it's up to each investor to decide how much weight to put on insider transactions. For me, insider selling from a high-level executive like a CFO is usually a warning sign. It doesn't guarantee the stock will go down, but it does make me more cautious. Combined with the weak price action we've seen most of this year, it tells me that the market isn't fully convinced about Opendoor's direction right now. But that's just my take. I could be wrong. Maybe this is nothing more than old history, and the company will prove skeptics wrong over the next few quarters. Maybe new leadership will step up and bring in a stronger strategy, or maybe the selling truly does reflect deeper concerns that haven't surfaced yet. What do you think? Do you see this as a positive move that brings stability, or as a red flag showing a lack of confidence from leadership? Share your thoughts. And remember, always do your own due diligence before making any decisions. This is not financial advice.